Sorry about that. Good afternoon, traders. How are y'all doing today? Happy Tuesday. I just can't keep track of days anymore, right? Happens when you get old, I suppose. Happy Tuesday. I hope your day is going great. If you haven't already, please be sure to check out Mahesh's live stream. He goes live at 12:30 Central Time, 10:30 West Coast Time, and that makes it 1:30 Eastern Time. Do check that out. Mahesh was talking about something pretty cool today. Actually, something I had not considered in my trading, and so I want to jump into what he was talking about because I thought it was pretty brilliant, actually. So he was talking about the utility sector, and one thing that he was looking at was the market breadth, which you can get to by clicking the market breadth inside the platform. Zoom it on in, and he was talking about how when he looks to trade, because we have similar yet different styles. He likes to look for the bottom, right, on the breadth, which is, something great to look for, or the top. And then he also combines that with these overlays down here. What do I mean? Oh, I didn't mean to close that. What do I mean by overlays? Let's go to XLU, because that's the utility sector. I'll show you what I mean by the overlays. So, for example, June 25th, XLU seemed to have bottom on the market breadth and was starting to grab more and more buy signals. And at that same time, you can see that the number of stocks with red overlays had also bottomed around that time. Maybe not so much June 25th. Let's call it maybe July 3rd, right? You can see, let me zoom in just even more. Oh, that helps. Okay. You can see here the number of stocks with red overlays started to go back the other direction with more stocks having green overlays. So if we look at July 5th, that'd be right around this time. And in fact, we did get a buy signal on XLU about 3 or 4 days later. So what I mean by the overlays is when you look at any chart inside of OVTLYR, you'll see the green overlays for an uptrend, red overlays for downtrend, and white overlays for a sideways trend. So I thought that was really smart. So I appreciated him, bringing that together. Mahesh, he trades, like I say, he trades different than I do. And he's looking at lots of different factors. And so that was one that I thought was really good and worth sharing. Dave, good to see you. Wes, glad you're here. Alex, hey man, thanks so much for buying some popcorn for my son. I really appreciate it. That was really cool of you. Randy, good afternoon. Michael, glad you're here. Tug was on the live stream earlier, so it was good to see him there. And also Tug, thanks for buying popcorn for my son. Joel is here. Jean-Louis is here. Very cool, very cool. All right. So the market is very indecisive right now. We did get a new all-time high on the SPY today. We did. This blue line right here was previous all-time high, and you can see it kissed right on over that. And then it has come back down, right? The market is very, very indecisive because we may be looking at rate cuts. We may be looking at rate cuts, Goran. So let's jump right into our market analysis, and then we'll talk a little bit more about charts today as well. Oh, wait a minute. Yeah. That's the right button. Let's go. Welcome to the OVTLYR Trading Room. This is smart trading made simple. Save time, make money, start winning with less risk. Now, for those of you who don't know me, my name is Christopher Ewell. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using the OVTLYR data, and I call it the golden ticket trading strategy. So real quick, what does OVTLYR do? It's a 4-step process. Number 1, OVTLYR monitors how investors are reacting to changing news, market conditions, and price movements and the economy. Number 2, OVTLYR determines if investors are acting irrationally fearful or greedy and by how much. Number 3, OVTLYR gives buy and sell signals when these irrational behaviors reach an extreme. And number 4, allowing you to get into the stock before the OVTLYR move happens. So let's go take a look at our member highlight of the day by looking at our Discord. So Randall, and Dave were sharing a couple things over the last couple days in the Discord. They're trying to find a less expensive way, without a doubt, of getting the TrendSpider order blocks into other platforms. Dave was looking at the Thinkorswim platform, doing some pretty cool stuff on there. And then Randall was saying, thanks for doing that. And if you have any updates, please let us know in the forum. And then Max had a question, which I thought was worth mentioning here on the Discord as well. We don't cover every stock out there in OVTLYR, right? We cover about 2,000 stocks. Actually, we can look at the number real quick. We can do the math together. We're smart people. We can do the math. Come on. Here we go. 870 plus 914. 870 plus 914. And then go to the ETFs. Plus 108 plus 142. So 2,034. That's the number of stocks that we cover. So, of course, it is a ton, but also there are some that you may not come across. So please know that we are always here and always looking to help you out in the Discord. In fact, I believe it was Tug. Yeah, he mentioned yesterday how much he appreciates the responsiveness of the OVTLYR founders and partners, and that we are exemplary. So glad to help you out in any way that we can, right? That is our objective here, is to make this as the best possible place for you, right? So be sure to share your stories in the Discord, because the first rule of OVTLYR is you tell everyone about OVTLYR. Now, I know you're already subscribed, so definitely hit that thumbs up down below, and that lets YouTube know just how much you like these videos. So with the golden ticket trading strategy, always starts with the market. We're going to let the market tell us which direction it's going, with a 10 over the 20, price over the 50. Hey, Sebastian, good to see you. And we have chart right here. So the 10 is over the 20. Price is definitely over the 50, right? We've had this the last few days. The order block that we have been talking about is gone, right? The order block up here is gone because yesterday it closed above that point, and when it closes above those, they disappear, right? They just literally disappear off the chart. So that is gone. We did set a new all-time high, but the market is still very, very nervous, I guess you could say. Really, we haven't had any price change in the last three trading days. We're looking at the first Fed cut or Fed rate cut in, I don't know how long it's been, a while. And so it has the potential to move the market a lot, right? We don't actually know what's going to happen. But the consensus is a 25 basis point cut. Now, it's unusual that the Fed does a surprise. They could, absolutely they could. They may even go as high as a 50 basis point cut. Now, I'm not going to say if they get a cut, it's going to go down. If they don't get a cut, it's going to go up, because we don't actually know, right? Some people would claim to know and say, hey, you know what? Anytime I get rate cuts, stocks go up, right? We have seen that, but also we've seen stocks go up when they have had increases in rates. I remember specifically thinking that there's a perfect correlation, which there's never a perfect correlation in the market, thinking there was a perfect correlation that stocks go up every time they cut rates and go down every time they raise rates. And I remember trying to trade that one day and just like getting so frustrated. It's like, of course it didn't move the direction that I wanted it to. Why would it go the direction I wanted it to, right? So don't try and outsmart the market in this case, right? If the market is going to go up, let it go up. It's trending up right now, but we do have a sell signal on the SPY. Let's go to SPY real quick. Oh, there it is. We do still have the sell signal on the SPY. So the OVTLYR data is not super bullish on the market right now, even though the market trend is right there. We can go the next step and look at the market breadth. Market overall breadth is turning. It is turning, right? It did bottom out a couple days ago, and now market breadth is very close to turning above the 10-period moving average. And I wouldn't trade this, right? I need to put this out there. I'm not going to violate my trading plan. We've had, several days of talking about how important it is to have that trading plan and how you don't jump the gun, right? If you don't get everything set up, you don't trade. Now, granted, we could get that buy signal tomorrow. We could have the market breadth cross bullishly, and we've already got the trend being bullish. So you know what? We may be trading as soon as tomorrow, but don't force anything, right? This is bearish. This is bullish. This is still bearish, but leaning bullish right now. So don't force anything, right? The master key works. It doesn't work every time. Nothing is guaranteed every time, but the master key really, really works. So you've got to wait for everything to set up. So while we're waiting, let's go and do another lesson on trading today. And today I wanted to cover ATR. Now, previously, if you want to go back to September 10th, we talked about how to position size for using volatility, right? How important it is to have your position size change based on the individual stock's volatility, right? Because any stock you could buy, but one share of Tesla is not the same as one share of Coke. And one share of Coke is not the same as one share of GE, right? You can name any two stocks out there, and you could buy one share of any of them, but you're not going to have the same risk, right? You have any position size, and it's not the same risk. And that's where ATR comes into play. ATR is the way basically to balance volatility across any asset class. And this is super freaking cool. Now, ATR is not my idea. ATR actually came from Richard Dennis and the Complete Turtle Trader. And I pulled out my copy, and I thought there was a couple spots worth mentioning. So I'm going to jump into those real quick. If you don't already have this book, look, I'm going to continue to recommend you great books, right? It's up to you if you decide that it's worth the $8, the $9 that you might have to pay for it. It could literally be the best $8 or $9 you spend in your entire life, or you can choose to ignore it. The choice is yours. Listen, I've done all this. I've done it all the hard way. I'm trying to give you the shortcuts. I'm trying to give it to you the easy way. Okay, so on page 83, they talk about the in size. So the way that they get to their position size, which we're not going deep into position sizing today. We've already done that. They call it the in value. Okay, so for every one in is their position size, whether it be 100 shares or 100 contracts or 6 shares or 17 contracts, whatever the case is, that's one in to them. And they use ATR to come up with in. Okay, so we'll scoot forward to page 87. They also talk about how they would go up. Yeah, they set their stops at half an in on the first day of trading from that point forward, right? So whenever they get in, they set it at a half ATR. That's not my rule. I didn't come up with it. These people who are way smarter than me came up with it, okay? Half an ATR. So what is an ATR, right? An ATR, according to ChatGPT, in stock trading, ATR stands for average true range. It's a technical analysis indicator that measures market volatility by decomposing the range of an asset's price over a given period. Let's break that out. The true range is calculated as the greatest of the following: the current high minus the current low. Current high being on the SPY as of today, 566.58, minus the current low, 560.80. So we could do that math. So the high, 566.58 minus 560.80. So that is the true range, the absolute value of the current high minus the previous close. All right, so there's more to it than this, right? It calculates the greatest of the following: the absolute value of the current high today minus the previous close, the absolute value of the current low minus the previous close. And then the average true range is then derived by calculating the average of the true ranges over a specified period, usually 14 days, right? Listen, we are blessed beyond belief, because back in their day, not back in my day, we're still in my day. Back in their day, they had to do this by hand, right? They had to go in and they had to calculate the current high minus the current low, the absolute value of the current high minus the previous close, the absolute value of the current low minus the previous close. And then they had to average that over the last 14 days. Listen, ain't nobody got time for that. Ain't nobody got time for that. Just click a couple buttons, okay? So go up into your charts And most charting platforms, if not all of them, are going to have this. You just go up in the indicators and you can type in ATR, right? And it's going to give you a few different ones. The one you're looking for is average true range, okay? And so it's going to give you some things you can add to it, right? You can change the periods from 14 periods, which is the default here, usually 14 days. Change it to whatever you want. I leave mine at 14 days. You can actually in TrendSpider lock it to a different symbol, right? So instead of it being on the stock you're on, you can put it on whatever stock you want. I don't know why you'd want to do that, but you could. And then, you know, you could change your color and then you can talk about where you want to put it. So if we go to ATR on here, we can look at the history and see some really cool stuff. So let's make this bigger. All right. So a couple things you'll notice is ATR can like expand very quickly, right? Volatility can expand very quickly. So if we're looking over the past, let's say the SPY went from around 6 on the ATR down to a low of 4.5 up to 5.2 down to a low of 4.25. And then very quickly, as the market sold off, right, you see this move down here. This 10% move in the span of 15 days resulted in the ATR, the average true range, expanding from 4.25 up to 9.6 at its high, 9.7 at its high, basically. So it went from how much was that? 4.25 divided by 9.7. Did I do that right? No, 9.7 divided by 4.25. So basically the ATR went up 2.25x, right? Which means your position size would shrink by 2.25x when you factor that in. And this is so critical, right? Because as there's more volatility, you want to trade smaller, right? It's exciting, right? The movements are there. The only way you make money in a stock is if it moves. But if it moves too much and you're too big, you're going to blow out your account. So I use ATR for position sizing, which, like I say, go back to September 10th to get that one. I'm keeping track of all these, and we're gonna put this together in like a course for you guys. But go back to that one for lessons on how to calculate position size. This formula here. But you can see ATR is built into this. This is fundamental. This is like the red blood cells in your blood, right? You can't live without it. You can, but you probably won't for long because you're not position sized to fit the market. You're not position sized to fit what it is today. And to that point, you may have had 100 shares or whatever on the SPY in July. And then if you traded 100 shares in August, you're actually taking 2.5 times as much risk, 2.25 times as much risk as you were just a month ago. And most people have no idea about that. Most people have no idea that I'm still trading 100 shares, Chris. It's the same amount of risk. No, it's not. Right? When the average range moves so much, you need to position size appropriately. So let's chat about a couple things that I put on my charts. So if I were to enter a trade right now, I'm not going to, but let's say I did. The first thing that I do is I put on a half ATR below this point. So a half ATR, I have to do the math, 7.32. Makes 366. Take 366 down from that point. So minus 562.05. You've seen me do this. 558.39 is my half ATR point. There we go. We're within a nickel of that. All right. You can, of course, adjust it to whatever. So if the market goes against me, right? If the market goes against me, I'm only giving it this much room. As we listened to the trading psychology with Mark Douglas last week, really, really good one. If you didn't get a chance to, we got a lot of good feedback on that one. We're only going to give it a few dollars to figure out if this trade is going to work. Keep that in mind, right? You're saying when you get in this trade, you're only going to give it $4, 562 to 558. You're only going to give it $4 to find out if this trade is going to work. And if it doesn't, that's okay. But you got to get out, right? You got to get out. you can't let it go down 15% or 10% or whatever before you decide, you know what, maybe it's not going to work, right? That's $54. That's the difference in a trader who survives and a trader who blows out their account. Is the trader who survives says, oh, you know what? I'm going to give it $4 to find out. And if it doesn't work, I'm gone. Whereas the other guy, it went down $54 and he's like, man, this sucks. I got to get out. You're never going to survive if that's the case. So that's the very first thing I do. The next thing I do with ATRs is I like to go up one ATR from my entry point to where I'm rolling options, to where I'm getting aggressive. This is not, what am I trying to say? The rolling options is beyond the scope of what we're going to cover today, but I just want to set that point, right? So if I'm only going to give it a half ATR, in fact, let's remove this line so we don't get confused. If I'm only going to give it a half ATR down, I want to see it go up. And if it goes up, I have plans, right? I have plans. If it works against me or if it works for me, I have plans. So let's say 562.05 plus the current ATR at 7.32. So I would go up to 569.37. Right there. By the way, thank you again, Goran. Goran actually was the one who brought to my attention that I could have like predefined lines on here with the labels and the colors just like I like them. So I appreciate that. It makes it a lot easier. So if it goes up by one ATR, that means I have now broken out of the range that I'm in now. We have set a new average range. Now, of course, we've seen this a million times where it'll go up and it'll come right back down, right? We've seen this. And I'm going to get really nerdy on you for a minute. Follow me for a second. If I got in at 80 delta, and delta means $1 in option, or for every $1 move in the stock, the option will move by 80 cents. Okay. If I get in with an 80 delta and it's gone up to here, that option may now be a 90 delta. So I can roll it. And when I do, like I say, beyond the scope of what we're doing, but I'm trying to give you some perspective here. When I roll it, I'm going to roll it from 90 back up to 80. Okay. So I'm taking those 10 deltas away. I'm basically resetting my position, but in the same time, I keep the trade on, I've taken partial profits, and I've freed up capital to do more trades with. Then if the trade goes against me, right, let's say it goes right back here, I will actually have more money in my account by having rolled it at that point than I would if I had just left it there. Now, Chris, how could you have done that? Probably should have waited to explain this when we get to that part of the strategy, but I'll do my best here. If it goes from 80 to 90 and I roll it up to 80 and then it comes back down, it's not going to be 80 again. It's going to be at 70. So my option is actually going to be worth more than the original 80 delta to me because I was able to keep the profits in the meantime, even though it came back down. May not necessarily guarantee a win, but at the same point, it allows me to be offensive yet defensive on this trade. And I do that basing this on the volatility, right? I'm not doing this willy-nilly. I'm not doing it at any point. I'm not doing it at a $5 change. I'm doing it at one ATR change because that can change, right? If it's gone up that much, that means there is an actual fundamental shift in the stock. And hopefully, it also means we're about to see some like rocket ships up to the moon, right? We're going to have Elon take us on SpaceX up to the moon. That'd be awesome. Doesn't always happen, of course. But that's part of trading with the volatility. And then if we did it here, where the volatility is so much lower, 4.25 versus 7, right? I could trade twice as much and I can roll it up twice as fast. That's pretty cool. But I'm also giving it half the risk, right? If this is a $3.50 risk here, or $4, let's just round it up to $4. If this is a $4 risk here, my risk on this side, when the ATR is lower, is I'm only going to give it $2. So I want to show you what that looks like. I did plan this out. No, I don't remove everything, just these. I did plan this part out. So there is an indicator that you can look for called ATR trailing stop. Now this should look really familiar. This should look ultra familiar. We'll make this green. We'll make this ultra thick. So you can set this trailing stop to be whatever, right? But let's say I put it at 0.5. This is really cool. The difference from the current close to this line is a half ATR, right? That would be my my starting point to get out. Now, of course, I wouldn't leave this on my chart because it's all over the place, right? Like if you wanted to use this as a trailing stop where it pulls up behind it each day, you totally could, right? Giving a half ATR. And then when it closes on the other side, it flips, right? Then it goes a half ATR above it. But that's a really easy way to account for volatility in a trailing stop, right? Instead of a 10-period moving average, right? You could use a half ATR trailing stop and say, okay, when it closes below my half ATR trailing stop, then I'm out. But it is definitely a lot more work. It's not something that I would never trade with that, but I would use it on the one day to get my new stop level, right? If this is here to here, right? 285 is a half ATR on that particular candle. Whereas if I take 285, in fact, this is one of the things I wanted to do. If I took 285, which was a half ATR at one point, and I put it on this candle here, I don't know how well that's going to zoom in. You can see I'm nowhere close to the half ATR. The half ATR here is expanded. Now it's 419, right? It's like $1.50 more, basically. So 50% more risk, maybe even more. Right? Let's say it's $2 more. So this is useful, but I would only use it on the day you're putting on the trade. Otherwise, I would take it right off because it's going to mess with what you're looking at. So ATRs are great because they allow you to change what you're doing with the market based on what the market's doing. And I couldn't think of a smarter way to trade than by having the ATR value built into all these parts of your system, right? Where you're going to get in, give it an ATR above, give it a half ATR below. When you're position sizing, right? Building that in. So now you're limiting your risk in multiple ways, right? As Mark Douglas talked about on that trading psychology video we did, second time I'm mentioning it, he talks about limiting your risk. And during that point, I was like, we limit your risk in two ways. Number one is by position sizing correctly. You can't position size correctly without taking into account the volatility and how it changes on each individual asset. And number two, knowing where on the chart you're going to get out, right? The charts aren't magical, okay? But they do give you lots of data, lots of information, okay? You've got to remember that if I'm going to get in at this price, I'm only going to get out if I have an exit signal happen. Sometimes, you got to take your losses and move on. But when it's a half ATR loss, it's a lot easier to take than assigning a random 7%. We mentioned that the other day. That's William O'Neill's rule in how to make money in stocks, 7%. That's so arbitrary. How can you 7% on one stock could be half an ATR, whereas 7% on another stock could be 17 ATRs, like it never moves. So why would you use that? Using the ATR gives you way more information and definitely worth your time. Tug says, in my opinion, a rate cut is probably already baked into the market. Totally could be, right? That's the whole thing, right? The market already prices things in. My guess is the indecisiveness is the uncertainty of the magnitude of the cut. Randy says, Thinkorswim says ATR 14 Wilders. I don't know. Yeah, this doesn't say anything about Wilders. So I assume it's going to be the same data, honestly, Randy. take this off. Wes says, these books you recommend are worth at least 10x, maybe 1,000x. How much they're priced at the store? Absolutely. Absolutely. I'm glad you're getting value out of that, Wes. Okay, let's wrap this up over here. How traders use ATR. It's a volatility measurement, like we discussed. A higher ATR indicates higher volatility, while lower ATR indicates lower volatility. A stop loss placement. Some traders use ATR to determine where to place stop loss orders, giving them more room during highly volatile periods or tightening up stops when volatility is low. Exactly, right? The ATR will expand or contract, and so the half ATR will also necessarily expand or contract. Identifying breakouts. ATR helps traders understand when a price breakout is significant, like we talked about, right? Helps us understand when it's moved up, an ATR from where we got in. As higher volatility often accompanies strong price moves. Would you like more examples of ATR in stock trading strategies? Yeah, let's go for it. Dave says, I think Thinkorswim is the same date as TrendSpider from what I've seen. And he says, looks the same. I'm just not sure what WildLeaks is. Dave says, I've used ATR to determine the width of iron condors. Works well. Iron condors don't work well. That's beyond here. But that's where I was losing my face over and over and over. Okay, so this just talks about how to set it as your ATR value for your stop loss, breakout opportunities, ATR for trailing stops, ATR position sizing, right? All the stuff that we do on a daily basis. And we do it because it works, right? We do it because it keeps our risk small. It lets our position sizes be dynamic based on what the market's doing. And that lets us have a position size that's appropriately risking the same amount of account value in any different stock. Coke and Tesla had 12 times different ATR values, but yet we can risk the same dollar value in our account by changing our position size using the ATR. And then we can also find the risk on our the risk on any stop loss. And we can also figure out when we've got those breakouts that are really working by using one ATR above. So it's a complete package. It's one of those things that I'm so glad that I came across because 99% of people don't even know what this is. They don't understand how powerful it is and why, just this little tiny line on your chart can be so impactful. And Randy says, like I said before, love the half ATR to get out. I do too, my friend. So that's going to cover everything in the charts section of the trading strategy. We'll go into, I think we already did market breadth before, didn't we? Yeah, we did. We did market breadth here. Okay, so the next step will be reducing risk. We'll work on this next time. So we'll work on setting your stops, taking these exits for the next few days, right? I want this to be the most comprehensive trading course you've ever had in your entire life, which is why I'm taking the time to go through every little bit as best we can. Because at some point, you're going to look back and you're going to say, wow, I am so glad I learned that. And I am too. I am so glad that you're going to learn this because I am blessed beyond belief that I had the opportunity to work with 5 market wizards and some incredibly wealthy people who taught me how to trade. So how about I just pass that on to you? Plus, making it with OVTLYR just makes it a million times easier. So thank you all so much for coming today. Real quick, before you head out, I need to go over here. Hang on. There we go. Thank you so much for being an OVTLYR. We literally couldn't do this without you, and we want to pay you back every single day by helping you save time, make money, start winning with less risk. And don't forget, we are raising the price on the annual plan at the end of this month, so you need to go get it. It's only 82 cents a day. Make sure you click the coupon on the pricing page if you haven't already got it. And of course, if you haven't already, hit the like button. It is totally free, and it lets YouTube know that you like these kind of videos. And like I say, the first rule of OVTLYR is to tell everybody about OVTLYR. Have a fantastic day. We'll talk soon.